Hello and welcome back to Tech Tangents, everyone. I'm Jenny.
And I'm Mark. Jenny, hope you had a good week. Did you happen to catch any of the whirlwind from Nvidia's big developer conference, GTC, last month? There was quite a bit going on.
I did. Hard to miss, really. Jensen Huang, the CEO, definitely has a stage presence, doesn't he? Leather jacket and all, lots of announcements, new chips, big partnerships. Seemed like a strong showing. But then, I noticed their stock actually. Well, it stumbled a bit? What was that about?
Yeah, interesting timing, right? Shares fell about 3.4% right after the keynote. It suggests that even with all the impressive tech demonstrations, investors might be looking beyond the immediate announcements, maybe sensing some, let's call them, undercurrents or potential headwinds.
Okay, so let's unpack that today. Nvidia's seeming stranglehold on the AI chip market, what might be making investors jittery, and where things could possibly go from here. Because, let's face it, they've been the name in AI hardware, particularly for getting these massive models trained up.
Exactly. And that's a crucial distinction you're making. The shift in focus from times training asterisk AI models to asterisk inference. Training is that incredibly compute-heavy phase, gobbling up enormous datasets and needing the most potent GPUs, which is where Nvidia, with chips like the H100, has just, well, they've dominated.
Right, so training is like cramming for the final exam, needing all the library resources and caffeine, and inference is actually taking the test, or maybe even better, applying that knowledge out in the real world, making predictions, generating text, identifying images?
Perfect analogy. And while Nvidia made a fortune during the cramming phase, their data center revenue was astronomical. What was it, $18.4 billion in their last reported quarter? Just staggering numbers. But the applying the knowledge phase, inference, that's becoming far more significant for actually deploying AI widely. And that's where the competitive landscape gets a lot more crowded.
Okay. So the thinking might be, can Nvidia keep that same kind of lead when the market dynamics change? When it's less about brute force training power and maybe more about, what? Speed? Efficiency? Cost for running these models day to day?
You hit the key points. It's a mix of all three. We're hearing about companies like China's DeepSeek, for instance, suggesting their chatbot is much more cost-effective to run per query. Then you have AMD stepping up significantly with their MI300X, and Intel is making noise with Gaudi 3. They're all targeting that inference market, arguing you don't always need the absolute peak performance if you can get good enough performance much more cheaply or efficiently.
It's like the difference between needing a Formula One car to learn how to drive versus needing a reliable, fuel-efficient sedan for your daily commute. Both need engines, but the requirements are different.
Exactly. The F1 car is the training powerhouse, the sedan is the inference workhorse. And while Nvidia wants to sell you both, competitors are saying, hey, our sedan is pretty good, and it costs a lot less.
Makes sense. So acknowledging this shift, did Nvidia show anything at GTC specifically aimed at strengthening their position in the inference game?
Oh, for sure. That was a major focus. They unveiled their next-generation architecture, codenamed Blackwell, and specifically, the Blackwell B200 GPU, often referred to as the Blackwell Ultra. Jensen Huang spent a lot of time talking about how it's designed to dramatically cut down latency for large language models. The goal is near instantaneous responses, even for complex queries. Think web search speeds, but for generative AI.
Okay, Blackwell B200, the Ultra. Got it. But I feel like I heard another name too. Rubin? Is that something different or part of Blackwell?
Right, good catch. Vera Rubin, named after the astronomer, is slated to come time after times Blackwell. Think of it as the generation beyond, likely doubling down on efficiency improvements and maybe more specialized capabilities, particularly for inference happening outside the data center, what we call edge computing. Running directly on your phone, in your car, on a factory robot.
Ah, the edge. Okay, that makes sense. And Huang mentioned this concept of agentic AI. Sounds a bit futuristic. What does that translate to in practice?
Think of AI systems that can tackle complex, multi-step tasks with much less human guidance. Instead of just responding to a prompt, they could plan, reason, and execute a series of actions to achieve a goal. Like an AI travel agent, Not just booking a flight you ask for, but planning an entire itinerary based on your preferences, budget, and real-time conditions. Huang estimated this could require, potentially over 100 times the compute compared to current models. So, chips like Blackwell and Rubin are being engineered with that future in mind, needing huge amounts of memory and faster processing to handle that kind of reasoning.
Wow, okay. So the tech roadmap sounds forward-looking, aiming at these next-level AI applications. But you mentioned potential headwinds earlier. I did read something about potential production complexities with Blackwell. Could manufacturing hurdles be another reason for that investor caution?
That's certainly part of the chatter. There were reports, like one from TrendForce, I believe, suggesting the sheer complexity of the Blackwell design. It uses multiple chiplets connected together in a very advanced package, might lead to tighter manufacturing timelines or potential yield challenges initially. In this fast-moving market, any significant delay can open the door wider for competitors. Companies like Dell, Lenovo, HP, Supermicro, they're all eager to get these new chips into their systems. Any hiccup in supply gets noticed fast.
So it's a race not just in designing the fastest chip, but also in reliably manufacturing and delivering it at scale. It's not just about the silicon itself, though, is it? Nvidia always emphasizes its software ecosystem.
That's arguably their biggest advantage, their moat, as they say, the CUDA platform. It's the software layer that developers use to program Nvidia's GPUs for AI tasks. Estimates suggest something like 70%, maybe more, of machine learning developers are working within the CUDA ecosystem. It's familiar, it has extensive libraries, and it creates a significant switching cost if you want to move to a competitor's hardware. They also announced new software tools at GTC, like NIM microservices, aimed at making it easier to deploy AI models, including optimizing for that low-latency inference, targeting sub-75 millisecond responses, which is vital for real-time interactions.
Okay, that CUDA lock-in is powerful. And speaking of real-time applications and the edge, that partnership with GM caught my eye. Using Nvidia chips for advanced driver assistance systems in their cars, starting around 2026?
Precisely. That's a prime example of inference at the edge. They're using Nvidia's Drive Orin platform, and likely looking towards future drive platforms based on tech like Rubin, for features like enhanced collision avoidance, maybe more sophisticated automated parking or highway driving assists. It shows how this AI compute is moving beyond massive data centers and into everyday devices, cars, robots, medical imaging, smart cities. That's where chips designed for efficiency and super quick responses, maybe under 50 milliseconds, like the upcoming Vera Rubin generation, will be essential.
That really broadens the potential market significantly. I saw one market research firm projecting the overall AI chip market could exceed $500 billion by 2033. That's a huge number.
The projections are wild, and Nvidia is clearly positioning itself to capture a large slice of that pie. Their R&D spending alone reflects that ambition. An analyst, I think it was Josh Gilbert from eToro, pointed out that Nvidia itself is projecting a $525 billion total addressable market for their times products by 2032. They are not thinking small.
But here's the million-dollar question, or maybe the trillion-dollar question given their valuation. Does that projected growth fully justify where their stock price already is, especially after the massive run-up? Ben Bajarin from Creative Strategies raised a good point. Maybe investors had already priced in a lot of this positive news and future potential before *GTC even happened.
That's a very strong possibility. The stock had, quadrupled over the last 3 years or so? Much of that surge was fueled by the excitement around generative AI following ChatGPT's debut. So perhaps the market reaction post-GTC wasn't disappointment in the tech itself, but more a show me the continued hyper-growth sentiment. They needed more than just impressive demos. Maybe clearer reassurances about navigating production smoothly, or evidence they can maintain their margins against rising competition.
Which brings us back to the competition again. How does Blackwell B200 actually measure up against what AMD is bringing with, say, their next anticipated offering, the MI400?
Okay, comparing specs gets tricky, because it depends heavily on the specific AI workload and how performance is measured, like FP8 or FP16 precision. Based on Nvidia's GTC claims, the Blackwell B200 seems poised to offer higher peak theoretical performance in certain key AI training and inference benchmarks compared to current rivals like the Michigan 300X. Comparisons with the times generation like MI400 are speculative until AMD reveals details, but the expectation is fierce competition. But remember, it's not just about peak flops. Power efficiency, performance per watt, is becoming increasingly critical, especially for large deployments. And then there's the cost factor we discussed.
Right. Is the Blackwell performance leap enough to justify what will likely be a premium price point? Especially if competitors offer, say, 80% of the performance for 60% of the cost? That equation might look attractive to some customers.
That's the calculation many companies will be making. And Nvidia still ships considerably more enterprise and data center GPUs than AMD, right? The volume difference last year was significant, giving Nvidia much larger revenue streams from this sector. That existing install base, plus the CUDA software advantage, creates substantial inertia.
Okay, but let's talk about that dominance itself. It also raises some big questions, doesn't it? If one company effectively controls, say, 70% of the training hardware market, and maybe 60% or more of the inference market, as some estimates suggest, what are the risks there? Are we talking potential monopoly issues?
It's a concern that's definitely being voiced more often. Research Point 1 Monopoly. Heavy reliance on a single supplier for such critical infrastructure, the engines of AI, carries inherent risks. Think about supply chain vulnerability, potential for price gouging, or the possibility of innovation slowing down if the dominant player becomes complacent. We saw some of this discussion bubble up during the GPU shortages a couple of years back, impacting gamers, but also researchers.
And how does Nvidia respond to that? Do they acknowledge these concerns about potentially cornering the market?
Publicly, they tend to emphasize the intense competition they face and the rapid pace of innovation required to stay ahead. They'd argue their success is earned through superior technology and the value of their integrated hardware-software platform. But the questions persist. Regulators might start looking more closely, and customers are certainly keen to see viable alternatives emerge to increase their negotiating power and ensure supply diversity. Research specific. Question 1 implied.
And this gets tangled up in geopolitics too, right? The ongoing tech tensions between the US and China, the export controls on advanced chips.
Exactly. Those export restrictions are specifically designed to limit China's access to high-end AI chips like Nvidia's H100 or the new Blackwell systems. While that impacts Nvidia's sales to China, it also acts as a powerful incentive for China to accelerate its own domestic chip development. Research Point 2 Geopolitical influence. Companies like Huawei with their Ascend chips, or Alibaba's T-Head division developing processors. They're pushing hard. This could reshape the global competitive landscape in the longer term, creating regional champions.
So we have market shifts from training to inference, intense competition on performance, cost, and times efficiency, potential production hurdles for the newest tech, the powerful CUDA software moat, geopolitical pressures, and these underlying monopoly concerns. Wow. It's definitely a lot more complex than just Nvidia makes fast chips.
It really is. They're navigating a very dynamic and high-stakes environment. The transition to inference at scale, the rise of specialized chips for edge computing, the software ecosystem battle. It's fascinating and, frankly, crucial to watch given how central AI is becoming.
So looking ahead, besides the Blackwell rollout timing and the eventual arrival of Vera Rubin, what are the key signposts you'll be watching for Nvidia?
Well, firstly, how quickly and smoothly they ramp up Blackwell production. Any confirmation or refutation of those delay rumors will be significant. Research Point 2 Production delays. Secondly, I'll be tracking adoption rates. Are major cloud providers and enterprises snapping up Blackwell? Or are we seeing AMD's MI300X or Intel's Gaudi gain more traction than expected, especially on price or availability? And thirdly, developments in edge AI. How platforms like Drive Orin and their robotics initiatives, like Project GR00T shown at GTC, evolve and integrate this tech into tangible products.
And from a market perspective, their next earnings report will be really telling, won't it? Seeing if that incredible data center growth rate can be sustained, what their forward-looking guidance is, and how they address these questions about competition and margins.
Definitely. That's expected around mid to late May, I believe. That report and the analyst call will give a much clearer picture of whether investor confidence is solidifying around the Blackwell roadmap, or if those concerns about the inference transition and competition are still casting a shadow.
It really feels like a pivotal period for them. Still the clear leader, the one everyone measures against, but facing perhaps more complex and numerous challenges than ever before.
Well put. They've set an extremely high bar with their technology and market execution, but now the challenge is to maintain that trajectory while navigating all these crosscurrents and fending off increasingly capable rivals. It certainly makes for a compelling story in the tech world.
It absolutely does. Okay, Mark, I think that's a comprehensive look at the current state of play for Nvidia. We've hit the tech, the stock jitters, the competition, the software, the ethics, and what to keep an eye on.
Yeah, a lot to digest, and it's moving fast. Never a dull moment in the world of AI hardware.
All right, before we sign off, we're curious what you, our listeners, think. We'll put a poll up on our platform name, e.g., Twitter feed, community page. Which factor do you think will be most important for AI chip adoption in the next few years? Peak performance, cost efficiency, or power efficiency? Head over and cast your vote.
Yeah, let us know. Because principle, understanding your perspective helps us shape future discussions. We'd love to hear your take on whether Nvidia can maintain its dominance, or if the competition is closing in faster than expected.
Great point. Thanks everyone for tuning in to Tech Tangents. We appreciate you lending us your ears. We'll be back next week with another deep dive. Bye for now.
See ya.